Welcome back, fellow financial enthusiasts, to another exciting episode of ProsperFin TV. Today we're setting sail on the vast ocean of corporate bonds. You might be wondering, why bonds? Well, my friend, prepare to be surprised. This is not your run-of-the-mill finance topic. We're about to dive into a world where big money meets big business, and where calculated risks can yield handsome rewards. So, fasten your seatbelts as we explore the fascinating terrain of corporate bonds like never before. Now let's start at the beginning. Imagine you're an investor with a little extra cash to spare. You want your money to work for you, but you don't want to play the high-stakes game of the stock market. Enter corporate bonds. These are essentially IOUs issued by companies, promising to return your money with interest at a specified date. Simple, right? But let's add a bit of color to this. Picture yourself in the boardroom of a multinational corporation. The executives are discussing ambitious plans, launching new products, expanding into new territories. But there's a hitch. They need capital, and that's where corporate bonds come in. These companies issue bonds to raise funds from investors like us, promising attractive returns for our investment. And here's where the plot thickens. Just like in the stock market, the value of these bonds can swing based on a variety of factors: economic conditions, industry trends, even the latest Wall Street buzz. It's a thrilling game of strategy and timing where fortunes can be made or lost in a heartbeat. But fret not. For with the right knowledge and tools, you can navigate these turbulent waters like a seasoned mariner. So, why should you consider corporate bonds for your investment portfolio? For one, they offer a consistent stream of income through regular interest payments. They're also generally less volatile than stocks, making them an appealing choice for investors seeking to diversify their portfolios. And here's the cherry on top. In case of bankruptcy, bondholders are given priority over shareholders when it comes to reclaiming their investment. It's like having a safety net for your hard-earned money. Hold on to your hats, because things are about to get interesting. Imagine you're sitting in a boardroom, surrounded by top executives of a multinational corporation. There's an air of excitement as they discuss plans for expansion, brainstorming ideas for innovative products, and strategizing ways to conquer new markets. Yet, all these grand plans need one essential ingredient: capital. Money to turn these ideas into reality. This is where the magic of corporate bonds begins. Corporate bonds are essentially loans that investors like us give to companies. By purchasing a bond, we're lending our money to these corporations, allowing them to fund their ventures. In return, they promise to pay back the principal amount along with interest at a predetermined date in the future. It's our way of playing a part in their growth story while also earning a decent return on our investment. Now let's get into the nitty-gritty. The interest rate, or coupon rate as it's often called, is the primary lure for investors. It's the annual return you'd receive on your investment, and it's usually fixed for the entirety of the bond's term. Sounds like a pretty good deal, right? But the plot thickens. Like any good thriller, the world of corporate bonds has its twists and turns. The value of these bonds can rise or fall based on various factors. Economic conditions, industry trends, even the company's financial performance can all impact the bond's price. And as the bond's price fluctuates, so does the yield or the actual return on your investment. This dynamic nature of corporate bonds makes them an exciting investment avenue. On one hand, if a company does exceptionally well, the price of its bonds could rise, giving investors the opportunity to sell their bonds at a profit. On the other hand, if the company stumbles, the bond's price could fall. But even then, as long as the company doesn't default, investors would still receive their promised interest payments. It's a high-stakes game of cat and mouse, where fortunes can be made or lost in the blink of an eye. Yet, for those willing to understand the rules of the game and play it smartly, corporate bonds can offer a rewarding journey. So, why should you consider adding corporate bonds to your investment portfolio? You may be wondering. Well, let's delve into the key reasons. Firstly, corporate bonds offer a consistent flow of income. These bonds are basically an agreement where you lend your money to a corporation, and in return, they promise to pay you back with a fixed interest rate at a specified maturity date. This means you can enjoy regular interest payments, providing you with a steady and predictable income stream. It's like having a reliable tenant who never fails to pay rent, only this time it's a corporation on the other side of the lease. Secondly, corporate bonds generally exhibit less volatility than stocks. The stock market can resemble a wild roller coaster ride, thrilling at times but also potentially stomach-churning. Corporate bonds, on the other hand, are more like a steady train ride, providing a smoother and more predictable journey. This makes them an appealing option for those seeking stability and lower risk in their investment portfolio. Moreover, corporate bonds can help you diversify your investments. Just as you wouldn't want to eat the same meal every day, you wouldn't want to put all your financial eggs in one basket. By investing in corporate bonds, you can spread your assets across different types of investments, reducing the risk and enhancing the potential for returns. Finally, and perhaps most importantly, corporate bonds offer a level of protection in the event of a company's bankruptcy. Bondholders are akin to creditors, and in the unfortunate scenario of a company going under, creditors are at the front of the line when it comes to getting their money back. In contrast, shareholders are at the end of that line. So investing in corporate bonds is akin to having a VIP pass, giving you priority access to a company's assets if things go south. In conclusion, corporate bonds can offer regular interest payments, lower volatility compared to stocks, portfolio diversification, and a safety net in the event of bankruptcy. It's like having a safety net for your hard-earned cash. But don't just take my word for it. Let's hear from some real-life investors who've struck gold in the world of corporate bonds. Meet Jane, a seasoned investor with over 20 years of experience in the financial markets. Jane shares, "I've invested in everything from stocks to real estate, but corporate bonds hold a special place in my portfolio. They offer a balance of risk and reward that's hard to find elsewhere. The steady income stream they provide has helped me weather economic downturns and unexpected life events. Plus, the thrill of supporting companies I believe in and watching them grow is truly rewarding." And then there's Tom, a young professional who started investing in corporate bonds just 5 years ago. Tom's experience showcases the accessibility of corporate bonds. "I was initially intimidated by the world of investing," Tom confesses. "I thought you needed a lot of money or a degree in finance, but corporate bonds have opened up a new world for me. They've made investing understandable, engaging, and most importantly, profitable." We also have Linda, a retiree who has found peace of mind in the stability of corporate bonds. "After retirement, I was looking for an investment that could provide a reliable income without too much risk. Corporate bonds fit the bill perfectly. The regular interest payments supplement my pension, and I take comfort in knowing that my investment is relatively safe." Finally, let's hear from Raj, a tech entrepreneur who appreciates the strategic value of corporate bonds. Raj points out, "As a business owner, I understand the need for capital to grow. When I invest in corporate bonds, I feel like I'm directly contributing to the expansion and success of a company. Plus, the returns can be pretty sweet." These are just a few examples of the many investors who have found success in the world of corporate bonds. From seasoned investors to beginners, from retirees to entrepreneurs, corporate bonds offer opportunities for everyone. Corporate bonds have been a game changer for me. Of course, no investment is without its risks, and corporate bonds are no exception. Like any savvy investor, it's crucial to understand the potential pitfalls that come with this territory. Economic downturns, for instance, can affect a company's ability to meet its financial obligations, including paying bondholders. Changes in interest rates, too, can have a significant impact on the value of your bonds. A rise in rates can cause bond prices to fall and vice versa, creating a seesaw effect that can leave investors dizzy. Moreover, a company's own financial health can pose a risk. If a company faces bankruptcy, your bonds could be worth less than you initially invested. But don't let these risks deter you. Instead, let them guide your investment strategy. By staying informed about market trends, economic conditions, and the financial health of the companies you invest in, you can make sound decisions. Diversifying your portfolio can also provide a buffer against potential losses. By staying informed and diversifying your portfolio, you can mitigate these risks and emerge victorious in the end. Well, that's all the time we have for today, folks. We've journeyed through the thrilling world of corporate bonds, a realm where fortunes are made and financial dreams are realized. We've seen how these bonds can provide a steady stream of income, a safety net in times of turmoil, and a chance to diversify your investment portfolio. We've heard from real-life investors who've struck gold in this market, and we've also acknowledged the risks that come with the territory. But remember, knowledge is your compass in these uncharted waters. Stay informed, stay vigilant, and don't be afraid to ask questions. And if you've enjoyed this voyage, give us a thumbs up. Let us know your thoughts in the comments below, and share this adventure with your fellow financial enthusiasts. And while you're at it, be sure to subscribe to ProsperFin TV. Until next time, keep investing smartly.